My name is Michael Guyette, publisher of the Lead Lag Report. Joining me for the hour is Big Cheds himself. Cheds, it's been a minute, and I always like to emphasize that I appreciate those who are actually positive, and you occasionally send me very encouraging messages. So, man to man, I appreciate that. But for those who are not familiar with your background, introduce yourself. Who are you? How'd you get interested involved in markets? And talk about some of the things you've gone through in your life.
Thanks for having me, man. I hope you're doing well. And a warm hello to your audience. Hope everybody's doing well out there. I'm glad they didn't record the last one because we said some stuff that could come back and haunt us.
I say shit all the time that haunts me, and I'm still here.
That's all we can do. So I've been trading kind of probably about 15 plus years, and I'd say 10 years plus taking it seriously. You think of me as kind of a pure price guy. I found that I'm not so good with the fundamentals. And what I found is that I can have two people in the room who are probably smarter than me, and they can argue both sides of a fundamental case, and I'll just be convinced in either direction. And then at the end of the day, I pull up the chart, does the price hold support or not, and kind of let that guide me. Let's see. I wrote a few books. I wrote Trading Wisdom, Trading Quotes as well, published back in December. And my cancer memoir, I'm a lymphoma survivor, and I'm actually rewriting my cancer memoir right now. I've been in crypto probably since 2017, and I've been on like social media since 2014, kind of like a newbie helper, chart nerd kind of thing. I got burned a lot when I started, but I had some people helping me out, and that really stuck with me. So I've tried to kind of pass that forward, and I've spent a lot of time thinking, writing, talking about helping new traders to avoid my old mistakes, and that's kind of my thing. I've been with Bitcoin Live, which is a wonderful platform. I have, a great team in there like Peter Brandt and Bob Lucas and Dean, Axel Kaibar, very heavy on classical charting and technical. So I've been doing that since 2018. And I trade a lot of stuff. I trade a lot of crypto, obviously. I trade a lot of big board stuff. I do options and big board. I do some Forex, and I kind of just dabble. I'm always trying to learn, experiment, and get better. But I'm really just a price guy. I just have the fundamentals. Like I said earlier, you can see it kind of, I can argue or someone else could argue in either direction. And for me, it's, what does the price do? So I really micro specialize in price action. I'm on YouTube sometimes, but not that much, mostly on Twitter. And yeah, I'm just always happy to do these conversations. You have some great guests and really cool topics. So it's an honor to be part of this conversation.
All right. So there's a number of cliche lines when it comes to price, one of which is price is truth.
Mm-hmm. Yeah.
And I've always had a problem with that as a mindset because price changes every day, right? And the truth is changing every day. Yeah. Now, the reason I'm framing in that sense is, okay, so you're a price guy, but price does have noise, does have randomness. So you have to also presumably factor in time frame.
Yeah.
Right?
It's a great
when
call.
You think about price. So how do you think about that interaction? Because I think the time frame part gets to be tricky, right? In terms of the way that people think about what happens next.
Yeah, I mean, so you can think about like a trade. If I think that, X, I could say X, I guess US Steel, but I was going to say X for like a metaphor. But let's say it's US Steel X, actually. And I think it's going to go up. If I think it's going to go up like in the next week, I can take a bet. But if I'm wrong, I'll lose. If I'm doing options, right, I'll get the time decay. But if I really think it's going up, but I'm not sure when, I might take like a monthly or a yearly call. I give myself a little bit of time. So it's a question of what kind of risk threshold do I want to take on? How much of a gamble, right? Because it's a gamble. It's like poker where you try to get your money in, 60, 70%. And over the long run, it's going to work out for you, right? And there's what you can't control, of course. But there's what you can control. What you can control is how you lever your risk. Like if you're doing options, like how much time you give yourself. If you're just taking a straight directional trade without any kind of options, just a spot trade, how do you define where your idea fails? Which is really the most important thing, is every time you enter a trade, you have to know like when the idea will fail so you can get out. You don't want to stick around forever. And then the trade owns you, it owns your sleep, and now you're averaging down, and all of a sudden you just, you're down 50% and you're wondering how you got there. You can have an idea, and then how well can you define the idea? And then how much risk do you want to take on to see that idea play out, and how you're going to manage it? And a lot of that is like how much time do you have? Not everybody can sit at a computer all the time. Some people have real jobs. So they have to kind of, take a trade based on a daily close or a weekly close or a monthly close. And then there's, 1 hour traders, 15-minute traders. So it's a lot. To try to answer your question, it has to do with how much risk you want to take on and how you structure that risk.
What type of time frames do you typically focus on? Intraday, daily, weekly, monthly, quarterly, yearly?
It's a great question. So, I'm watching a lot, like when I'm actually trading stuff, for example, so there classical charting with time frames after volatility, right? Like, let's say I do Bitcoin a lot, right? So let's say Bitcoin drops, like $3,000 in one day, like you drop to lower time frame, right? After volatility is when you go to lower time frame. Another time is when the price is near a key level. That's also when you're going to go to a lower time frame, a 4 hour, even a 1 hour. But when I'm trading on the 4 hour, I still understand what the daily chart looks like in relation to what the weekly chart looks like, right? Because there's trends within trends. So you need to be like a scientist moving around the magnification and able to kind of put each signal into its own context. But you have to know when to go to lower time frame. And that's in terms of trading, right? So after volatility and when the price is at a key level, you go to a lower time frame. I'm generally scanning on daily and weekly. Like when I'm just scrolling through TradingView and I'm sending out tweets, I'm very rarely going to tweet out like a 4 hour chart, right? But daily and weekly. And I think that's long enough for people, especially weekly, who are not like day traders and just kind of want to get a sense of the trend. Like weekly is really good for the trend. And then you start to drop a little bit lower than that. Now we're talking about picking an entry, for some type of a trade.
I'm glad you frame it that way, trends within trends, right? They keep on emphasizing this idea that you can be bullish and bearish at the same time,
Yeah.
right? Depending upon what time frame you're looking at. Now, I do think it has to be in terms of that point about conviction. So, and right? So if you believe that short term, intermediate term, long term is all an uptrend, presumably that's when you have most confidence in trade. You weight it higher in a portfolio. I understand the speed aspect of having to react faster based on volatility, but what do you do when you have sort of a lot of conflicting signals? Do you just say, you know what, let me play with something else? Or do you try to
do nothing?
Still manage?
Yeah, I would say do nothing, really. I mean, you shouldn't really be itching for something. I mean, it should be like a really good opportunity should jump up and hit you in the face. And, yes, I'm borrowing from my quotes in my quote book. So I'm paraphrasing a few of them, but like the harder you have to look, the more you're forcing it, like it's just not worth it. So like a good opportunity will jump up and hit you in the face. All charts obviously are not created equally, and all price levels are not as equally defined, right? So if your whole, and this is again, I'm a trader. I know you're a fundamental analyst. I'm sure you trade as well. But if my whole thesis as a trader is that price has broken resistance, right? And let's say, how well defined is that resistance? Am I just saying it like it's a spot where the price rejected once, or is that where over a 2-year period the price tried to bounce and was rejected? It came back 3 months later. So you have something called time interval, right, in between the attempts. So I have 4, 5, 6 attempts over 2 years, and then it finds. So that's a well-defined level. So I want to look for a well-defined level, right? And if I'm working off of less well-defined levels and less clearly defined price structure, I'm probably just looking for action. So you have to always be mindful of, is this opportunity, right? Or am I just gambling, right? Is this just me looking for something because I'm bored? I'm waiting for the football game to start and I want to squeeze in a trade, kind of thing.
I mentioned fundamentals more for context, and because I think fundamentals dictate conditions ultimately when they matter, right? Which is, it's like me saying Nvidia is fucked is not trading advice, because what does that even mean, right? I'm more right? No, really, but I'm really talking about, it to me it's a symptom of a mania relative to fundamentals, and at some point that gets resolved, right? But you can't do that from an entry and exit. Okay, so since you mentioned the point about opportunities hitting you in the face,
good opportunities,
right, really good opportunities. So which I liken into the fat pitch, right, where you can be kind of going, you can be breaking out, and then suddenly you get a couple of home runs, and then you win. Where are some of those opportunities now that are hitting you? What are you paying attention to?
I think that I feel like people are too bearish in equities right now. Like it's still obviously a strong uptrend, right? The SPX, the Qs, all these things. I mean, if Bitcoin drops back to around 25K, like you want to get involved, right? You want to think about sentiment, right? So opportunities may be, Bitcoin revisiting that major level, 25K, and everyone giving up on it, right? There was some nice sentiment a trough or a low in sentiment. Equities, like we just had the little pause, and people, a couple weeks back, and people were already calling for 4,200, and it made no sense to me, right? From the middle of July, people started calling for 4,200, but opportunities are buying a dip in these really strong charts, like an Apple or some of these other ones, when the price tests that first level or second level of support, and not just assume, like when everyone else is telling you that it's going to break through these 3 support levels. Well, maybe it won't. Why don't you watch them one level at a time? So the opportunity might be, and I can't necessarily like list one right now, but when you get a real quick sentiment imbalance, pull up that chart and buy that dip in the uptrend, when everyone else is telling you it's going much lower, right? You want to be buying dips in uptrends, selling rips in downtrends. You want to be trading with the overall trend. I don't know. I could quickly scan and try to pull up some stuff. Like I'm looking at the dollar. Dollar's probably set to pause a little bit here, which means some of these like Forex pairs are going to do certain things. I was looking at a bunch of them earlier, right? Like the dollar CAD's probably going to fade here a little bit, right? In the weekly chart. The dollar versus Swiss franc may be setting up for a little bit of a drop in price here. Stuff like that. What's going on with silver and gold? Not much there. Those are kind of ranging. There's not much there. But and these things will pop up when it's sentiment's such a big clue. It's such a big clue when everybody is either freaking out or they're sure of something. Go pull up the chart and look at price. Where is it in relation to major support levels? There might be an opportunity, and if you find yourself counter trading sentiment, it's amazing how much easier things seem to be. I don't know if you've experienced that yourself.
Yeah, no. I mean, I tend to be contrarian just in my blood.
Yeah.
The sentiment thing I think is worth kind of exploring, because the dilemma that I see, and I'm sure you probably see the same, right? You'll always have people say on X, everybody's bullish.
Yeah.
And then you'll have on the same day people say everybody's bear. No, really.
Yeah.
And I think the issue is people are getting fooled by what the algorithm is showing them, as if it's a representation of, in quotes, the crowd.
Yeah.
So it's hard to really know what true sentiment is just from what you're reading.
I would say I would only devil's advocate that, because you should have already curated your own feed, and these are people that you've been listening to and you have a sense of. And like if some random stranger's bullish or bearish, I don't know how to put that in context, but like I can just feel sentiment in my feed, and I can tell when it's imbalanced, because these are just people I've followed for a long time. So I just think that's a skill that someone should develop. And you have to have a feel, a read, an instinct. You need muscle memory, just like any skill in life. And reading sentiment's an important one that people shouldn't neglect. And you really shouldn't. You should have a curated feed, and you should know who you're following, so you can put into context what these people are saying. I would be surprised to see equities completely rolling over here, just given the strength they've had. And I just feel like with sentiment, I feel like people tend to give up too easily. Consolidation is not weakness. When you have a really strong move, and then the price pauses a little bit, people just assume it's going to give up a half or 2/3 of the move, but you have to give, benefit of the doubt to the trend.
Let's talk about sentiment in terms of different parts of the marketplace, right? So going back to the point about fundamentals, right? Fundamentals at least can anchor you somewhat around, over optimism or over pessimism. You don't necessarily have that dynamic with, cryptocurrencies, with Bitcoin, right? With Ethereum. Is it fair to say that sentiment is a bigger driver of price when it comes to those areas, as opposed to, when you're doing stock analysis?
It's an interesting question. Is it more so in crypto? Yeah, that's interesting. I've never really thought about it that way. I would say maybe so. You probably have like a younger audience in crypto. You probably have like a more immature audience than kind of like equities writ large. So I'm just trying to argue this and extend your question in my mind a little bit. So maybe, those people who are the younger audience, maybe they do overreact more. So maybe you get kind of bigger emotional imprints, right, from that younger crowd potentially. So yeah, I could see you potentially arguing that sentiment might be a bigger play in equities. I mean, you noted like in crypto. In equities, there's a lot of old hats, right? There's a lot of folks who've been doing this for a long time. There's a lot of established rules. There's a lot of established rules of thumb, even. It's a much more mature market. So I would say you could probably I can see why someone would argue potentially that sentiment might be a bigger driver in crypto, but I don't know that you could necessarily prove that one way or another, like with a data study or anything like that.
Yeah, I mean that to me makes sense. And to your point, equity investors, bond investors, they're institutionalized, their mandates, the big money is not shifting day to day. Price is more set at the margin, right? As opposed to where you can have some whales moving, cryptocurrencies conceivably. Let's talk about the sort of different time frames and trends that you're seeing when it comes to Bitcoin in particular. Now, I've been posting myself pretty loudly and repeatedly, and I've been wrong, obviously, so far that if I'm right that there's a credit event that's out there, that Bitcoin would diverge
Whoa.
like it did in March, right?
Yeah.
And when I said diverge, I'm talking about correlation, right, against the Nasdaq as a risk-on asset. It might behave a little bit more like gold. What are you thinking in terms of just kind of short, intermediate, long-term trends for Bitcoin?
I think sideways to slightly up. I think that well, first of all, if Bitcoin loses 25K, I'm gonna basically completely change my opinion on it because it needs to hold that level. It's the high time frame breakout level, the high time frame momentum level, but everything I'm saying assumes that level holds. I think I see us slightly up, but mostly sideways for a while here. I think we still need some more time to digest the 2021 move, both the April and the November move, and the consolidation after it. I think the idea of just simple new all-time highs every 4 years, I think we're past that because we have evidence of, and I'm right now watching Bitcoin jump up and I'm like itching to tweet it out, but I'll wait. But we have evidence of longer term weakening trend on the weekly chart with Bitcoin, right? What I mean by that is there's something called a 200 moving average, right? Which is just the last 200 sessions equally weighted, a simple moving average. And like Bitcoin always had that in its whole, like held it in its whole existence. Every time it like came back, and found support in 2015, 2018, COVID crash, it was below it like very briefly. But if you look at 2022, we spent several months below in the end of 2022 through really early 20. We spent several months below it, like the most time ever below that 200 moving average. That's evidence of longer term weakening trend. So I think we're still going to trend up higher, but we're not going to just keep making all these, drop 90% and then, triple the old all-time high or whatever. I think people are in for more of a grind than they realize. And that's just my sense of the trend, of the longer term trend. It's going to slightly trend up, but mostly sideways for a while here.
I saw somebody posting to you a thank you for not, being a, in quotes, shill, in other spaces, talk about, the constant bullish case for Bitcoin that's going to keep going up and up.
If I did that, I'd lose my credibility, though.
No, I'm letting you say because
Not that it happened to me, but
I'm actually being very sincere when I say that. I mean,
Oh.
you have to. The credibility point is critical, right? And it's more than
Mhm.
just being a good trader, right? It's being able to adapt your mindset, right, and not get wedded to a particular view.
So I traded a lot of penny stocks like around 2014, and that was really interesting for me. And I learned about volatility, and I learned a lot about sentiment, and I learned a lot about people selling stories, Michael. Like people trying to convince you of a case, the something's going to go up or down. And you know what I learned? One of the bigger lessons is that, like, I try not to ascribe people like bad motives for something. Like, if most of the time they're just speaking with their where their money is, right? So someone's like really bearish in something, they probably have like a big short. And if they're really bullish in something, even if it's like a super downtrend, they're just stuck. They've got a ton of money in it. So it's just human nature. I just found that there was an opportunity in a niche to just kind of call it clean. Just call it clean, right? Like, this is what I think's going to happen. And I've had to, and it takes mindfulness. It takes me trying to be aware of when I'm in something. Like, even when I have a pretty good position in something, I still try to be as objective as possible. I'm always asking myself, where might I be wrong? Where can I be wrong? Because capital preservation is so important. I want to keep on trading. I want to keep on doing this. And it's, I've had brokerage accounts that I've grown to big amounts and then just completely, run them to zero, and like done that a few times. And, I try to avoid that. So I want to keep doing what I'm doing. And that requires a lot of mindfulness and a lot of just always like, again, asking myself, where might I be wrong? So that's helped me. That type of approach has helped me to try to be objective. And but again, I don't assume someone's like lying or being dishonest when they say something and the data doesn't match it. I just think their money's in that direction, and they're just speaking with their money. And I think that's how a lot of people are.
Yeah, and I think it's important also to stress that everyone's got a natural bias. To your point about whatever they're invested in, so like my bias, is not to be a bull or a bear. My bias is I want to see the occasional flight to safety, right?
Yes.
Which is what has been lacking for my own strategies to do well, right? The last year and a half, 2 years as Treasury failed against equity volatility. Yeah, that bias is one you can't avoid, but it's also one that you can, I think, manage by just not only being aware of it, but constantly kind of self learning,
Yeah.
right? And so,
Yeah.
and researching. So
Yes.
let's talk about kind of your for what
Yeah.
like I remember my father used to go through chart books every
Mm.
weekend, right? Just like spend like hours, right? Literally with like printed chart books back in the
Yeah.
80s. How do you go about your own sort of constant updating of
Yeah.
information? What's your routines?
There's a Pavlovian system that I've built in where I like when I put out a really good tweet where there's good information and there's good feedback and people like it. And I like having insights. And so to like have that, I'm pretty much always scanning. And it doesn't mean I'm at the computer all day because I do a lot of stuff. But I'm always kind of looking around for something. And so, I mean, practically speaking, I probably look at the charts 30 times a day or whatever, but I'll look at them a lot closer, like on Fridays. Like I'll look at equities charts a lot on Friday afternoons. And I learned this a lot from Mr. Peter Brandt, who's a colleague and a friend of mine. And he's written some great books. If you haven't read his Diary of a Commodity Trader, Professional Commodity Trader, it's a really good book. Fridays, right? Because the weekly candle is about to close. And so then you get some really good information there. You've got a big, big, big downtrend. All of a sudden, you're putting in some dojis, you're putting in some smaller sessions. Like there's a compression of that prior force. I mean, not to get too technical, but I'm looking for stuff. I'm looking for momentum, early signs of momentum. It's like a cruise ship or a freight liner trying to make a turn. It's going to slowly turn. So I'm looking for those initial signs of turning. And so I'm always looking on like Fridays. Weekends have been kind of lame over the last year or two. Not a ton of volatility with crypto, especially. So maybe I take it a little bit more easy in the weekends, and that's probably healthy. And I think my wife appreciates that. But during the week, when the New York sessions open, especially, I'm looking for something that's going on, and I'm pretty much just always I have my phone. I'm always checking the price like everywhere. So maybe that's an addiction. I don't know, but I just stay on top of it.
Yeah, and of course, as you know, right, the issue with crypto is that the chart never
Yes.
right.
Yes.
It's 24/7, which makes it hard. Now I love your profile picture, right? Speaking about kind of being calm and
Thank you.
zen, right? That's kind of the framework that you have
Yeah.
there. Hard to be calm and zen and then on weekends when crypto occasionally
Yeah.
dumps for whatever reason, right?
Yeah.
So you want to enjoy life,
Yeah.
right? You want to be aware of your portfolio, but how do you manage that part of the 24-hour cycle when it comes to
Well, I mean, I at least give myself 7 hours off at night when I'm sleeping. So that's the first step. But I check it at night right before I go to bed. I check in the morning. And how do I mean, I don't mind it if there's a big dump. I just like action, because it's more information. It's another part of the story. Like I'm already so up to date with the story as of right now, because and for what I do with Bitcoin Live, I do member reports there twice a week. And even when nothing's going on, I'm still doing them. So I'm always like, so when there's new information and there's volatility, I get excited. There's something to talk about. There's some new price action to talk about. Now we can look for relative strength. We can see the different market participants, which ones are stronger or weaker than Bitcoin, which one, how they're responding to certain things. So, I just wait. I wait for volatility. When it happens, I get excited. It's like those people, it's like where, you're just living your life. All of a sudden you almost get hit by a car and you don't, right? But for that like half second, the half moment, you're feeling so alive because like something's happened and you're in the moment, right? So the volatility from just a psychological standpoint, I feel like it helps me to get back into the moment. And that's a struggle for all humans, is staying in the moment. So volatility helps me stay in the moment. I love it. I love it, man.
Speaking about action and speaking about volatility,
Yeah.
is there anything that you track that's sort of a an indication that volatility broadly might change, whether it comes to cryptocurrencies or equities, any kind of things that you look for as
Like
markers?
VIX, nothing like that. Yeah, not really. Just people sentiment, like Twitter. I'm scrolling through social media. I don't necessarily. I really try to not look outside the chart. Like in my realm, in crypto, there's like the BTC dominance chart. There's a total market cap chart. You can look at like open interest. You can look at like order books. I really don't do any of that because I've found that more than not, it leads me away from the truth. It leads me to maybe like a conclusion of something the price hasn't told me yet. So I really don't. I just look at the volume. I look at the volume candles. I look at social media as just a kind of combination of that. And I'll look at equities too and see if there's action there. And then when there's action in equities, and I'm like, why isn't Bitcoin doing anything? Right. So sometimes there's correlation, right? Sometimes there's not.
Let's talk about going back to sort of risk management. There's two ways of managing it, right?
Yeah.
One is speed, another is waiting. What's the biggest position you've ever taken in terms of how much you made up of your portfolio and how to work out for you?
In my early years, I've had stuff that was 80, 90% of my portfolio and it went to like zero. So, I've had massive, massive mistakes, which hurt me deeply and recovering from them. I had to take a few months off. I had to go read a couple textbooks, one each time, before I was willing to try again. I was stubborn and I kept many times I added to a losing position and it became like, now normally, a few percent. I'm taking small positions in relation to my bankroll because I'm just trying to grind. I'm a grinder now. I'm trying to grind it out. I want to keep what I have. I want to slowly improve. I want to keep practicing. I want to get better and better. But like, especially in my early years and some of my biggest winners, like I don't know that I could have them again because like I just let winners ride and I didn't take profit. Right. And I take profit now. I'm a grinder. Right. So early on in my trading career, I had my biggest wins and my biggest losses. And they were equally thrilling and devastating. And, just how do you survive that emotionally? Well, maybe you don't. And, maybe you can't stick around as a trader after going through that type of thing. So I tend to try to dampen my own emotional volatility with my position sizes now. If you want like more specifics about some of the stories, I think I have like an interview out here and there where I talk about, the different individual cases. But it was really in earlier in my career where I just took the biggest losses, where I didn't want to admit I made a mistake. I didn't want to admit I was wrong. And I just kept adding because it seemed like cheap, right? I thought something was going to go up and it dropped 20%. It seemed cheap to me. Well, it seemed a lot cheaper 3 months later when it was down 50% again. Everything I'm doing now, much of what I do now is to not only help other people avoid getting into that position, but also for me to avoid those huge emotional swings as well.
Let's talk about some of the quotes in your latest
Yeah.
book. First of all, why go the direction of quotes as a way of kind of framing a narrative?
So let's see here. Let me just pull up a couple so I have in my mind. So I wrote Trading Wisdom, and thanks for letting me talk about it. I wrote Trading Wisdom back in 2021. And that was like 50 lessons, right? And each lesson has like a couple quotes and I riffed in them. And then I found like over time, while I was having a glass of wine or I was hanging out with my friends, or even when I was talking to my good buddy, I have a really good buddy, Big Jonas, and we talk about trading all the time. And I'd be trying to explain something to him and we'd be arguing or debating and I would say it in a certain way. And I'm like, wow, that was a really good way to say it. So I tweeted it out. And it's words of wisdom. Because we need reminders. We need reminders, right? Like one of my favorite ones is, I'd rather be late to the party than show up at the wrong one, right? And it's like it's about rushing into a trade. Well, I'll wait for confirmation. I'll wait, until I'm. It's about these quotes remind us to. It's about the mental approach, right? Like one of them is, the discipline required to tell yourself no is the strongest predictor of a trader's success. Right? Like, are you able to tell yourself no? Right? Or is it like every trade you think might be a good one, you're jumping in every time? You know what I mean? Like, discipline's so important. Like, if you take trader with discipline, will always beat trader without discipline. So it's, And some of it is more like TA specific. Like the purpose of a trend line is to identify a trend, not a line. And that's where people focus on the line rather than the idea that it's really just a trend with a filter, plus or minus of price movement. Like in that book, I like writing. I love writing. I'm working on a trading journal book right now. And then I'm working on a poker and trading book. And then I want to write, a science fiction novel, like whatever. Writing's fun. I just learned I had a lot of great quotes. I went back through like years of my Twitter and I found quotes and I had new ones. And then I edited the quotes and I tried to make it more concise. And there's the power of 10, 15 words, in the right direction, in the right order and the right way. I mean, it's really powerful, right? So, you know, like stay single, don't marry your bags, right? Don't marry your bags, right? Like your bad trades, the ones that are going against you, like don't let it define you. That's just a trade. Move on. Like, don't let it define you. Don't marry it. Everyone talks about marrying your bags. Well, stay single. Don't marry your bags, stuff like that. So it's a lot about the trading psychology. It's from coming up as a trader and then succeeding and then teaching and then just working with people trading for years and just kind of so all the fruits essentially of that process.
When you were looking back on those quotes, do you remember if you had like purposely thought about the way you framed them back then, or is it one of those things where it's like subconscious and you just had to get it out? I mean, that's
Yeah.
often how I write. It's more like
It's freedom. It's really just like you. A lot of it is free association, which is what just came out at the time. And a lot of time when I initially tweeted it out, there was typos or it was inelegant. It was inarticulate. It was clumsy. So part of the process of writing the book was making it less clumsy and more elegant. So there's just the initial thoughts, there's a thought, which initially I just put out and was the concept of it. And then there's, again, when you're writing the book, you want to be a lot more precise and you want to be more precise. So it mostly free association initially, just trying to get it out there. And then, we'll get like 30 retweets and I'll realize like I misspelled a word and I'm like, oh, I'm an idiot. So, but who cares, kind of thing.
I'm glad you mentioned that point about the trend line. I joke about the squiggle line, not because I'm trying to be diminishing of technical analysis, but just because I do think that there's a lot of people that reference things on a chart that, they're kind of missing the point about what it actually shows, if there's any predictive power to begin with, right? And I do think kind of keeping it simple in general is a way to live life anyway. So what are some more favorite indicators that you always go back to?
Classical charting, right? Like Dow theory, the idea of like a primary trend and a secondary trend. And one of the big tenets of classical charting is horizontal structure, right? I don't really base trades based on like a diagonal trend line. So a lot of my, it's really just horizontal structure. Where does the price bounce from? Where do bulls step in and defend? And when the price is bouncing, where do bears step in, and defend? Where do people taking profit? So I like to use just horizontal structure. I like to use something called Bollinger Bands, which are created by John Bollinger, who is a great dude. There's a middle moving average, which is the MA20, which is just an average of the price over the last 20 sessions. And then there's these bands, which are reflective of the volatility. So often when the price jumps outside of those bands, it's a movement outside of standard volatility. It's a movement outside of the standard deviation, and often it will kind of snap back. So I use the bands. I use just a few simple moving averages. I talk about this all on my YouTube in the masterclass webinar series. But I don't use RSI. I don't really use oscillators. I find that they take my focus away from the price. I found myself over the years just focusing on identifying clearly defined price levels and then looking for the price interaction with those levels. When it gets closer to those levels, I drop to lower time frame. I'm doing candlestick analysis where I'm looking at what I refer to as the candle body progression. So if the price is advancing and you have all these big green candles, and all of a sudden you're getting smaller bodies, and then you get a doji, that's a compression of the price, right? That's a compression of the momentum. So I'm looking at that as well. And it's just my own style. So less is more. Simple is really important. The more, when you're a new trader, a lot of times you think, oh, all I got to do is start using this RSI or the stochastics and I'll be fine. But there's really no silver bullet. And all these indicators will take your focus away from the price. And that's what's most important.
No, I think that makes a lot of sense. I'm just in general a fan of not overly complicating things. How do you think about cash? And I say that
Yeah.
purposely. Some people get itchy,
Yeah.
right, in terms of having cash in their portfolio. Do you always want to deploy things, or do you say to yourself, you know what, I'm going to be largely fully invested, and if I need to, rotate
Yeah.
away, I'll just sell and then.
So I have some quotes in this, and my thoughts are that you always want to have a certain portfolio, a certain amount should always be in cash, no matter what, right? Because it will force you to be more diligent with your trading funds, right? You always want to keep a certain amount of cash. First of all, so you can take advantage of volatility when it comes. The best opportunities you usually won't see coming. The best opportunities are like these oh shit moments where what just happened and I can't believe I don't have any dry powder. I can't do anything now, right? So you always want to have cash available for that. Number one. Number two, it will force you to be more diligent, more careful with your with your trading funds, with the amount that you're going to allocate towards open positions, towards more active trading. So always having cash, dry powder, and then again that makes me more disciplined with what I am trading with.
What are some of the biggest piece of advice that you have for people that are tracking your content, listening to your spaces? I mean, yeah, presumably there's a lot of commonalities across sort of newer traders that you have to kind of right their wrongs.
Expect it to suck. Expect it to be really, really hard. And understand, like with anything in life, like what's going to define you is how you respond to adversity. What's going to define you is how you like. Here's a good one to answer the question. It's okay. Here's a quote from my book. It's okay to keep making mistakes as long as they are new ones. Right? Like that's a very important point. So if you made a brand new mistake you've never made before, great, forgive yourself, move on, learn from it, but don't keep making that mistake. That's what's so important. So it's going to suck because you're going to keep making new mistakes. But as long as you can avoid making that same mistake again, you'll be fine in the end. Capital preservation is so important, right? Like every time you enter a trade and even an investment, like you have to have an idea of when your idea fails, when it's wrong. You have to be able to preserve yourself for the next best opportunity. You can't just say, well, some people, you can't be stubborn. Oh, every time I get a trade, I have to wait until I'm at least break even. Like I'm down. No, I'm going to keep averaging down and I'm going to wait for it to bounce so I can get out at break even. I don't want to take a red trade. No, like everyone takes losses. So you have to get over your pride, get over your ego, and be quick to accept your losses. Be quick to accept when the idea fails. Be skeptical, right? If you're over trading, right? If I find myself over trading, okay, I have a new idea. I'll write it down on a piece of paper, and then I'm going to do 20 push-ups, 20 sit-ups, and then I'll look at it again. Does the idea still make sense? Find ways to slow yourself down. Find ways to make yourself more rigorous in your methodology with how you arrive at a trade. So those would generally be the pieces of advice I would give.
Yeah, I think you strike me as a guy who's always try to improve and self-learn. Obviously, you're very knowledgeable,
Yeah.
but what are some of the things that you're doing to sort of just expand your own way of thinking about the world, about markets? It's very easy to fall into the
Yeah.
trap of I'm good at what I don't need to keep expanding.
I'm going for my master's degree, so I'm starting that. Not that I need it, but I'd love to learn. I'd love to kind of in psychology. I want to see what kind of threads I can pull from that. I'm always looking for the next textbook to read. Honestly, for me, it's equities. I want to get really good at equities. I feel like I know the Bitcoin chart in and out. I can close my eyes and I just know it, but I want to get really good at equities of, commodities, just anything with a price chart. So I just want to get better, and that's just more and more practice. But outside of that, I'm doing stuff, like I'm doing martial arts. I'm in my mid 40s, but I was like, you know what? I want to get a black belt in the next 7 years. So I'm going to try to do that. I'm going to go get a master's degree and kind of see where that leads me in terms of stimulating me. I'm into art. I like to create art. I like to write. I have books I want to write. I listened to Stephen King's On Writing book on tape, and that gave me a whole bunch of ideas. So I've been rewriting my cancer memoir. And so I'm always wanting to do stuff, recognizing that today is wonderful and I'm not guaranteed tomorrow, but if I'm around for several more decades, I want to produce things. I want to create things. I want to make an impact on other people's lives, and I want to be fulfilled myself by learning and by creating things. And so that's generally my approach, Michael.
Cheds, for those who want to track more of your thoughts, your work, aside from obviously reading the books, where would you point them to?
I would say my YouTube channel at Cheds Trading. I've got a lot of great stuff there. And you can check out my Twitter feed, but probably go to Cheds Trading on YouTube. That's a good repository of a lot of my work. I've done 40 or so Twitter spaces myself. I'm not as prolific as you, but I've done a lot of these Ask Me Anything segments. They're like, 2 hours, and I just take random questions from people for 2 hours. So check out, that's a playlist on YouTube. And so just go to YouTube, Cheds Trading, and check out that stuff.
Everybody, please make sure you follow Cheds. I've got 2 more spaces back to back, so stay tuned for those. And hopefully, I'm trying to get my content out of the way. I make it a point to do 4 to 5 of these every week for the podcast.
Jeez.
So, listen, I don't really prep very much.
No, why would you? There's no point.
I
that
just
ruins
listen.
it. That
Right.
ruins it.
Yeah, exactly right. Makes it much more authentic.
Yeah.
But anyway, please make sure everybody follow Cheds, and hopefully I'll see you all in about 10 minutes. I appreciate you, man.
Thank you, brother.
All right, cheers, everybody.